Controlling your emotions to make smart investments, all right? That's what we're gonna cover in today's episode or segment of Secure the Bag podcast. But before we dive into it, first of all, you guys gotta wish my boy Juan Valdez a happy birthday! Happy birthday, my G.
Appreciate it, my
It was
guy.
yesterday, right? Yesterday was his birthday. How old are you turning, bro?
That's a great question. Usually it's the Jordan year.
The Jordan year. That's right, baby. 24. That's the number. Wait, no. Jordan year is 23. Just joking, guys. So for this podcast, I want to do a special giveaway. All right. I want to buy one of you guys a ticket to attend one of Umar's workshops. All right. He hosts them all over the United States. He's actually in LA hosting one for the weekend. And that's actually how I got him to sit down with me for an hour or so and chop it up. All right. But essentially, his story is so amazing. The tips that he shares in this podcast that you're about to watch is absolutely insane. So to encourage you guys to share this podcast right here, like I said, I'm gonna be buying one of you guys a ticket, but to enter in for a chance to win, all you gotta do is comment below with your biggest takeaway from the interview. Go ahead and leave a thumbs up, and most important of all, of course, hit that subscribe button, turn on those post notifications, and I'm just gonna choose a random winner, let's just say in 24, 48 hours from when this podcast drops. So just follow me on my Instagram. I'm gonna announce it on my Instagram story, so make sure you stay tuned there as well. But besides that, let's just dive right into it. All right, what's going on, everybody? Welcome on over to the Secure the Bag podcast. I got my man Umar Ashraf right here. And what we're gonna cover today is the role that your emotions play when it comes to the investments that you make in your life, such as, obviously stocks and any other type of investments. But primarily, Umar focuses on stocks. He's actually in LA for a couple days hosting a workshop. Is that it, a workshop? Correct. Okay, cool, man. So he, took some time out to come kick it with us out here in Studio City, and just chop it up. I don't want to hold him up for too long, but I definitely, he asked me, he's like, what is the one thing we're gonna go ahead and focus on? And I said, hey, obviously we want to hear your story, man. Your background, where you come from, and your upbringing and how you got to where you're at now. But also really in your field, right? You said that the primary thing is all about your emotions versus the logical aspect of investing. So start me off, man, from your story. That's where
So I started trading stocks when I was 18. I got into it as soon as I turned 18. Just like anybody else, you want to make a lot of money.
Yeah.
So you hear about the stock market and you're like, you know what? This is a place where I can make a lot of money. So as a high school kid, I had 20,000 saved up.
Yeah.
I was selling iPhones. I was working delivery and things like that. And with all that money I had saved up, I put every single dollar into
Every
the market.
single dollar.
Everything. I put everything in the market. As I put in the market, I'm like, you know what? I know you have to start investing. I know you have to start growing your money. So what I'm going to do is I'm going to make my money work for me. So I'm going to jump into the stock market.
You heard that saying?
Yeah. So
make your money work for you.
Exactly.
Like,
so
yeah,
it was like put it in the stock market. You're going to make a lot of money. So I took 20 grand, put it right into the stock market.
Yeah.
Now, as a high school kid, I have no idea what I'm doing.
Yeah.
But you're full of ego. You think you know it all.
Oh, I love that.
You think you know it all. You're like, you know
Yeah.
what? I can do anything I put my mind to. So I took my account from 20 to 35,000 within 2 months. But I had no idea what I was doing. It's all beginner's luck. A lot of traders that you probably come across too, they'll tell you the first few trades they make money on it.
Yeah.
It's all beginner's luck.
Kind of like sitting down at the blackjack table in Vegas.
Yeah. And then it sucks you in up until you lose all of it.
Yeah.
So after that happened, I'm in high school. 2 months goes by, and I just made 15 grand. So now I'm like on cloud 9.
Yeah.
I'm like, wow, I just made 15 grand in high school off a computer.
Yeah.
So as this happens, the luck kind of ran out.
Yeah.
So once the luck ran out, my whole account went down to 2,000. Once my account
Was it quick?
It took about 4 or 5 months. I literally made every emotional trade out there.
Yeah.
When I should have cut my losses. There was one stock I traded, Plug Power at the time. I was up on that stock, but that stock went from I got in around 7. It went from 7 to about 12, and I was like, no, I want to sell it at 13.
Yeah.
And then once it kept going higher, I was like, no, I'm going to sell it at 15. I'm going to sell. I was making these random numbers because of greed, all emotion.
Yeah, because you felt like it.
Yeah. So next thing that happened with that stock, the stock tanked. I should have cut my losses. I didn't, and I kept doing that over and over again with multiple stocks. Every stock I touched, I literally had no idea what I was looking at.
Yeah.
I was just like, okay, I think this is gonna go up because of the dumbest reason. Oh, Apple's coming out with a new iPhone, buy their stock.
Yeah.
This it's holiday season, buy Amazon.
So all types of irrational.
That didn't make sense.
Kind of, yeah. You're thinking 1 + 1 is gonna equal 2, and
yeah,
it's not
and it didn't make sense because now when I look back at it now, I'm like, what were you doing?
Yeah.
It's like, what were you doing? But at that moment, it made sense.
Yeah.
At the moment, it was like, this is the right trade to make. So I took my account to 2,000, and as I took my account to 2,000, now everybody starts coming out. Hey, stocks are bad, stocks are risky, don't touch stocks, you can't ever make money on stocks. But the people that were telling me this were the people that were working a 9 to 5, didn't really have any investments. So it was kind of like, do I want to take your advice? If I do take your advice, am I going to be in the same situation you are?
Yeah.
So now I've started hearing things from people that were successful, people that established themselves. These people came up to me and said, listen, for you to make money, there is money in stocks, there is money in real estate, there is money in e-commerce, there's money in these fields, but it's tough. Yeah. Why? Because you have to create your own income. When you work a job, somebody else is paying you, they're paying you for your time.
Ooh.
But when you work, like let's say you're doing stocks, real estate or something on your own, it's much harder, but the reward is much higher.
Yep. Higher the risk, higher the reward.
Exactly.
Yeah.
So they started telling me this, and I'm like, you know what? Yeah, that kind of makes sense. The people that are well established are telling me that stocks are good, real estate's good, e-commerce is good. So it's like, why not try it? So I was kind of honest with myself, and I was like, you know what? I didn't give this a fair shot.
Yeah.
I didn't really put my time into it.
Yeah.
I BS'd.
Yeah.
So now I'm like, you know what? Now what I'm going to do is I'm going to take a step back, and I'm going to really try to learn everything I possibly can. Now the problem with that is this information overload.
Yeah.
With stocks, like any financial instrument you try to learn, there's information overload. So once you go out, it's like, what do I use? What indicator do I apply? What do I look at first?
Yeah.
This is telling me this is telling me that. How do I analyze the stock?
Exactly.
So once you have information overload, it becomes tougher to analyze stocks. And there's obviously online courses, online videos that somewhat tell you how to analyze a stock, but to a certain extent.
Yeah.
So I would watch videos on YouTube, read books, but the real experience came when I put it in real money and I started trying it out.
Got it.
So I would put in real money and I would start trying it out.
Now let me ask you this, Umar. Really, because when I was first starting off, and even before we kind of hit that record button right there, we were chopping it up for a bit, and I told you, when I was younger, I was like, just like a lot of younger people that are probably watching this right now. By the way, you guys make sure to hit that subscribe, that thumbs up. If you guys want me to bring on people like Umar and others, like they want to see, the nation, the gang stronger than ever. So make sure you guys leave some great feedback, like some comments or a review on the podcast, whatever it is, if you're tuning in on iTunes. But really I was telling you about how when I was first starting off, I was just experimenting, right? I was experimenting with a couple different things. One of them being stocks. I also mentioned Forex as well.
How'd that go?
Honestly, man, the stock game right there, I didn't really dive too deep into. It was something that kind of caught my interest. That's how I learned about Benjamin Graham. That was actually, I remember clearly when I was younger, I would be, kind of just picking up books and just reading, a little bit about Intelligent Investor, for example. That's a great book, right? And the reason why, and I'm so happy that you asked that question, and we're on this topic of Benjamin Graham and that book, The Intelligent Investor, because really there's two kinds of different investing, right? There's ones that is the type of investing that's a lot more analytical, which is what I did in the Forex market, right? Okay. It's pure analytical. And then there was another angle to it that Benjamin Graham taught and mentored, Warren Buffett to trade by, which is really, looking at the pure product and the people of the company, right? That you're like, hey, I would trust these guys no matter what.
But this is the problem with that. This is where people mess up with that.
Yeah.
See, everyone says, "Oh, Warren Buffett became a billionaire because he does value investing." But what people
that's
don't
what it's
understand,
called, value investing.
Yeah. So now what people don't understand is Warren Buffett has billions and billions of dollars.
Yeah.
So he's unable to trade stocks.
Yeah.
So for him to buy and sell a stock as a retail investor like we would, it would be much difficult for him to enter or exit a position. That's A. B, when Warren Buffett goes and enters a company, he takes a huge position where he's on the board.
Yeah.
Meaning he can call the shots.
Mm-hmm.
Now, if we do value investing, we can't really control what the company's gonna do.
Yeah.
Now, if Warren Buffett is putting in 10, 20, 30, 40 billion dollars into a company and buying up a huge percentage of that company, he's going to have rights to that company.
Absolutely. He's gonna be on the board.
Yeah, so and he can control that. So he puts himself in a situation where he controls the company.
Got it.
So us as retail investors, we don't have that type of cash to go and invest into a company to control it.
Got it.
So if we can't control it, value investing for us kind of becomes different. Because now for him it's easier in a sense where he puts his money and he controls the company.
Got it. So like I really want to clarify that, because that's beautiful right there. That makes a lot of sense. Like when you have a lot of capital in the sense of either millions or billions of dollars, like Warren Buffett's case, you can invest to the point where you own more than anybody else owns in that company, right? A bigger percentage than anybody else. It doesn't have to be 50% or 90%. It can even be 30%, but everybody else only has 10%. Well, now you're the majority shareholder, and you can say, hey, okay, like I know about business, and so this is what we're gonna do, and therefore you have absolute control, like you said, to make things happen for that stock to go up, and you reap your rewards. But then there's the other flip side where you obviously only have enough capital to, make some plays, and you're trying to make some profit.
Of course.
And is that what you're?
That's what us traders are doing.
Yeah.
Us traders aren't really focusing on what the company does.
Yeah.
Right. We are looking at technicals. We're looking at technicals. We're looking at price action. We're looking at all this sense of information to understand where the price will head short term.
Got it.
Right. So we're not going to look at a company and say, oh, in 10 years this company is going to grow 50 times in size. We care about the short term movement.
Got it.
What's happening short term.
Yeah.
Now where a lot of technical traders mess up.
What's short term in your?
So now sometimes it can be a matter of a day to sometimes 2 or even 3 months. So now where a lot of technical traders mess up when people are doing technical analysis is they only focus on technicals and they don't consider some of the fundamentals. They miss out on some of the fundamentals, which is key. You have to apply some of the fundamentals such as sentiment. You have to understand what is the sentiment of a stock, because what drives the stock up and down? Demand.
Yeah.
So if there's more demand for stock, it's going to go up. If there's less demand, it's going to go down.
Absolutely.
So you have to understand the demand and the sentiment. Once you understand that, the second place where I see so many traders mess up is they don't focus on price action. They focus on the indicators. What that means is now, when you're looking at a chart, you have to focus on the price action that's presented on the stock chart.
For somebody who's not really, really intelligent or doesn't really know much about stocks, when you say price action, is it simply
like everything that's happening in the stock chart, where the stock is heading, the candlestick patterns, stuff like that, everything that's on the stock chart. What people do is they look at the indicators below. Now the indicators below should be used as confirmation.
Got it.
So people reverse it. So if somebody here is watching and they know about indicators, RSI, MACD, DMI, things like this, people jump to that first.
Yeah.
Now if you jump to that first, you're not getting a good play out of it.
Yeah.
You have to look at the stock chart. Once you look at the stock chart, you then go to the indicators.
The indicators.
That comes second. People reverse it because people go online, they'll go on Investopedia, they go on YouTube videos, and they see, oh, the RSI means this, the MACD means that.
Yeah.
Okay, so if the RSI goes up, I'm buying. If the MACD starts curving up, I'm gonna buy. If the RSI is in oversold or underbought levels, I'm gonna make this play.
That's so funny that you mentioned that, because literally when I was first starting off, that is the exact website where I would kind of look for these conspicuous or ambiguous like terms.
Yeah.
Like, oh, this sounds interesting, man. Like if I can find out this number right here and it matches and it seems like it's going up, it's like then this might be something.
Yeah, then it kind of makes sense in your head.
Yeah.
But
So
it's just
with-
what happens with that, by the way. People when people jump into stocks or any financial instrument, they like to make it complicated. Because when you make something complicated, you feel like you're doing it right.
Exactly.
But it's not really that complicated. It's very simple, but people make it more complicated than it really is.
Yeah.
And they make it complicated because they think it's complicated. So if it doesn't feel complicated enough, they think they're doing something wrong.
Then everybody can do this, and there must be no money.
Exactly.
Because then I have to overcomplicate. And it's so funny you mentioned that, because in the e-commerce space, which is obviously the field that I'm in, it's the same exact thing. It's like, well, it can't be this easy to sell something online. I gotta overcomplicate it here. And really what that does is, one, of course, it makes it feel like you're doing something complicated, so it makes you feel important, or it gives you a bigger feedback loop or whatever. But ultimately, keeping things simple is where the results are going to be. And so it's really interesting that you mentioned that when you're first starting off, we tend to overcomplicate it. And so let's kind of get into, or at least if there's anything else you want to mention, but I definitely want to shift into that emotional and the logical part of it, because I feel like the technical part is going to be a little bit of the logical, right? More of logical. If
So
you're
see,
looking at
the technical part, what it is
Yeah.
with the technical part, it's easy. It's easy to learn.
Got it.
If it was just about the technicals, you would have so many people learning about stocks.
Yeah.
So many people that would be successful in it. The problem isn't the technicals. You can learn technicals, I can learn technicals, you can get anyone off the street and teach them the technicals.
Yeah.
The tough part is emotions.
Yeah.
Once you get into any financial instrument, you trade crypto, you trade forex, you trade stocks, the emotional aspect kicks in and it takes over.
Yep.
It's kind of like this. It's kind of like, think about when you were in a bad relationship.
Yeah.
When you're in the bad relationship, it looks like it's the best thing ever. But once you get out of it, you're like, wow, what was I thinking?
Yeah.
Just like that, same thing with stocks. Once you are in the trade, everything looks good.
Because you have to rationalize it. You have to make sense out of the action you just took and commit all the way.
Exactly. So once you're unable to do that, it's like, when you're in it, it makes sense, but once you step out, you're like, wow, why didn't I make that trade? And people that have traded know, like, canceling your stop losses, not having stop losses. A lot of people buy certain securities, they buy certain stocks, forex, crypto, whatever, and they don't have a plan, right? Now, what I mean by having a plan is when you buy a stock, you have to know where your downside is.
Yeah.
You have to know, if I buy this stock at $14.50, where am I taking my loss? You have to establish that. You also have to establish a level where you will potentially take profit.
Yep.
People do not have that established. Now, if you take Bitcoin, for example, Bitcoin reached 20,000, right? After it reached 20,000, people were like, oh man, I wish I sold it. Now, if you take the same people that held Bitcoin until 20, right? And Bitcoin went to 100,000, they wouldn't have sold. If it went to 1,000,000, they wouldn't have sold. Why? Because emotionally you want more.
Yeah.
That's greed kicking in. As greed kicks in, you're like, I want more, I want more. You don't have a set number. So once it hits 20, you think it's gonna go to 30.
Yeah.
Once it's 30, you think it's gonna go to 40, 50, and so on until it falls.
And then there's really those two emotions, right? I feel like even Warren Buffett and Benjamin Graham tend to talk about them every now and then. And it's the emotion of greed, like you just mentioned, obviously. And the other one is fear of loss, right? Fear of loss. And I'm sure a lot of you guys that are watching right now can relate to this in the sense of, somebody's telling you about an opportunity and you're not really certain about what it has, what it's all about, like all the details and whatnot, but you're like, dude, it sounds like, this is interesting. Then another person would mention it to you and you're like, okay, now this is the second person, and then you might hear like 10 or 1,000, or maybe all the social media is talking about
crypto. Yeah.
And then you got people who one, have absolutely no idea what crypto is, investing their life savings. Why? Because somebody they watched on YouTube that has, enough subscribers or whatever it is, and they said so, right? They said so they went
There's
all
people
in.
that took out equity lines out of the house.
Yeah, equity lines, man. It is insane. Dude, remember that scam, what's it called? BitConnect.
Hey. What's up, Big Connect? And let me tell you that we are really changing the world as we know it. I am saying to so many people who said that this was going to be a con artist game, that this was going to be a scammer game. Hey, you're going to lose all your money. My wife still doesn't believe in me.
BitConnect.
No way. This Ponzi scheme, right? Where it was literally telling people put money in, they get this coin, and they're gonna get 30% returns.
Wow.
Right? Month after month, 30% returns.
Wow.
This
And people bought into it.
Not only did people buy into it, Umar, but they, like you just said, equity lines or home. What is it?
Equity lines that took
equity
money out of
lines,
the
against their homes or all their assets, and it was insane, man. And people went all in, and what happened was it was all a scam. Like, it was literally all a scam. But here's the thing, though. Emotionally, it makes all the sense because you're like, dude, 30% returns guaranteed month after month. All I gotta do is put in this specific amount.
But you have to understand everything has a downside.
Yeah, exactly.
People don't realize about the downside. Everything has a downside. There's nothing that's 100% guaranteed with stocks or anything. There's always that downside.
Absolutely.
And you have to protect that downside. Even if you see a stock and you have 4 indications that tell you it's gonna go up, you still have to have a downside. Even if you have friends giving you tips like this stock is gonna blow up, it's gonna go up, you still have to have a downside. And people don't have a downside. They don't think about the downside. All they think about is if this stock goes to 10, I'll make $20,000, I'll make $30,000, I'll make X amount of money. And once I make that X amount of money, I'm gonna go on vacation, or I'm gonna buy this car, I'm gonna do this. And they get stuck on that. And that's where the emotions kick in. Instead of saying, hey, this stock can go from 5 to 450, that's where I would potentially take my loss. They don't look at that. They don't look at the upside, which is why a lot of people that start trading, they fail.
Absolutely. So really all they're trying to focus on is that end goal right there, where they want to be at, you know, the lifestyle, right? Which is the reason why they get into it. And that's totally understandable. But really understanding the risk that you're taking at every single point in time, especially in a field like stocks, right? Like trading stocks, right?
All emotions.
It's all emotions. And really, because at the end of the day, you're making an educated guess. And I feel like a lot of times, even when I was first getting started, like I said, when I was just kind of testing out stocks and Forex trading, I tend to tell myself and hype myself to the point where, hey, you're a beast, man. You're gonna figure it out. You know what I mean? You got this. Look at this beautiful chart you drew here. Look at this pattern right here.
Yeah, it looks good when you draw it. When you start drawing it out, it looks cool and all.
It looks cool. It looks beautiful, man. And then when you press that button, right? And I remember this one time I was out in California. It was my first time in Cali. I had a mentor that lived in the middle of nowhere, man. Like literally between San Francisco and LA. This dead space. And he let me crash at his place, just sitting there, man, hanging out for like 2-3 days. And one night I placed a trade, and it literally went from like everything I had to losing everything, and then making another play the same night that would go on to make me that same money back. And that's when I called it quits, man. I'm like,
it's too much of a roller coaster.
Too much of a roller coaster.
It was too much of a roller coaster because you didn't have a stop loss. You didn't have a level where you're going to take the loss. So that was able to wipe you out, or wipe out your whole account to, you know, to actually get you afraid. But you have to have a level where you are comfortable in taking a loss, and that's not excessive, which is where risk management kicks in. If you ask any trader that's first starting out, ask them about risk management, they have no idea.
No idea. Risk management.
Yeah, they start out with, let's say, 5,000, 10,000, 2,000, 3,000, then dump all their money into one stock. Now, if you're starting off with a 10,000 account, let's say for argument's sake, and you dump it all into one account, you have to have certain risk management strategies where if you dump it into one account and that stock falls 20%, you're having a 20% drawdown. You're already down 20% on one trade, which should never ever happen, which is where risk management is key, but people don't like applying risk management.
Absolutely, because risk management sounds like you're thinking about losing money and you're not thinking about making money. When in reality, when you're investing, it's not just about all the money you make, it's about losing as little as possible.
Of course.
If worst case scenario. Perfect, man. So that's huge, right? Risk management. We just covered also you know, the difference between value investing and technical investing. And you said, hey, you obviously want to do a little bit of both. You can't.
You want to apply a little bit of fundamentals to it. You can't just rely on technicals. Like, I'll give you a perfect example. Stock AMD. Right? There's a stock AMD. Many people probably know about it.
And this is not financial advice.
No financial advice. No.
Nobody hit up my man over here for a lawsuit or something like that. And you gave him.
So the stock was around 9, from 9 till 34, 35. The stock had bullish sentiment, right? Meaning the stock had demand behind it. Now, around $32, $31, the stock now had bearish sentiment, meaning there was less demand for it for whatever reason because of the competitor Intel and stuff. So now, once it had less demand, the stock started falling. Now, that's the aspect of fundamentals you have to apply. You have to understand what is pushing the stock up or down. Once you understand what's pushing the stock up or down, your job is now to use technicals and then trade it. So if something is pushing the stock up, use technicals to buy the stock at the lowest point with the least amount of risk, and then once it hits that point, you want to maximize your profits. Now, if you are wrong in that trade, which will potentially happen, you take your losses and you move on.
You move on.
People
right?
don't like doing that.
They hate doing that. I remember I would come back for seconds, man, and I would get beat again. I would come in for thirds on that same trade that I had lined up, and I would get my face kicked in again. And so really it's like, again, that fear of loss, that greed, that just, it's like pulling you back and forth, right?
It just keeps going back and forth consistently, where you just have to know how to manage your losses.
Yeah.
The biggest thing with trading, it's such a weird game where for you to be a successful trader, right, you have to take losses.
Absolutely.
It's like this. Let me ask you this question, right? Think about this for a second. Let's say you start a business tomorrow.
Yeah.
You start a business tomorrow, you put 10 grand into your checking account, business checking account, you open it up, you put 10 grand, right? What is going to happen the next day? Is your account going to go up or down?
It's going to go down.
Why is that?
Because I'm going to buy a product, I'm going to buy inventory, employees, office space.
You're investing into your company, right? So now, why shouldn't trading be the same thing?
That's a great point.
You get what I mean? Now,
Absolutely.
where people mess up is you have to think about trading as a business. So when you take a loss, you're paying your employees. When you take a loss, you're paying rent. When you're taking a loss, you're paying insurance. You're paying business expenses. Once you start thinking about it like that, taking the losses becomes easier.
Yeah.
It becomes easier to take them. Once it becomes easier to take losses and you cut them short, now the times you are right and you can properly manage them, they will easily make over your losses.
Beautiful, beautiful. Now, speaking of that, right, is thinking of investing as a business. To kind of take that one step further, for everybody that's listening in on here, let's say they have a job, man, they got life going on, they got school, right? They got things going on, right? So they can't do the full day-to-day type of training, because obviously there's two kinds of training. You got the day-to-day, which is short-term, real active, eyes on the board at all times, and then you got the longer-term type of investing where, again, you invest in a company you believe in, you kind of sit back and, it's for the long term, right? You're not sitting there keeping an eye on it every day. So, and also it's interesting because for different types of personality types, I feel like some people honestly are not cut out for that day-to-day because they either can't handle the anxiety, the stress, the pressure.
See, the thing with the day-to-day, so it goes down to day trading. Yeah. Right? People want to jump into trading and they want to start day trading. Why? Because it looks cool.
It looks cool, man. You know what I mean?
It's not. It's not. If you really think about it, you starting out and wanting to day trade is not the smartest thing. Starting out and trying to day trade is never the smartest thing. Why? Because day trading, the stock is moving at such crazy fluctuations. You have to have a very, 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 very strong emotional background where you can control your emotions. If you cannot control your emotions, you're going to fail. So now I tell people, when you start out, swing trade. Swing trading is basically you buy a stock at a certain point, you make your setup, and you're holding for a matter of weeks, a matter of days. Swing trading, yeah. So now, if you can swing trade and you do well on it, right? Psychologically, now you can take on the next task. But now, if you jump right into day trading, which is much harder than swing trading, and you fail at it, guess what's gonna happen? Now you'll tell yourself, hey, I'm not gonna be successful at it. And the momentum of trading is gonna fall. Your momentum of being successful is going to fall. As that falls, you're gonna quit on trading. Say, you know what, trading isn't for me, it's risky, it's this, that, I'm not gonna do it. And you're gonna be stuck to your 9 to 5. So that's what it comes down to,
So we just went over the difference between, you just mentioned swing trading, right? So swing trading is not as rapid as day trading.
Day trading, yeah.
Because it's a little bit longer span. Then you got some people who invest obviously for the sake of like retirement, right? So that's a whole different conversation. I'm sure each one of these is a whole separate conversation, right? And where can they find out, by the way, just in case they want to attend one of these workshops, to find these finer details? On Instagram.
My Instagram. I mean, I'm posting stuff on YouTube. I'm just posting free content. I'm starting to upload more stuff.
Yeah, so absolutely.
My YouTube channel too, and my Instagram. You can put the link down.
We'll plug that in for you. Because I definitely, man, I honestly, I'm a big believer that what's a good fit for one person might not be the best fit for another, right? So if somebody's tuning in here, they're obviously, most likely you've subscribed to my channel, or if you haven't already, make sure you do that now. But if you're subscribed to my channel, it's probably because you're in the e-commerce space, right? You're trying to turn your passion into a profit. Call that P2P Nation. What do you think about that, man? P2P Nation.
P2P Nation.
Right? A nation of people turning their ruthless entrepreneurs, I call them, turning their passion into a profit. or
That's
other
nice.
people's passions into a profit if you're in the e-commerce space.
That's pretty nice. That's pretty nice. I
But
like that.
yeah, that's my family here, man. That we create this content for and really try to provide value. So if, let's just say, for example, you've been interested in, you know, trading stocks, investing in general, really where you want to start is with somebody that, you know, obviously has the results, and you guys will take a look, you know, at his work, at, you know, some of the results that he's produced for himself, some of his students, and it's honestly unreal. That's the whole reason why, you know, I invited him out here. I've never met Umar, just for a full disclosure. I've never met Umar before.
Today,
yeah, so this
time.
is literally us. Like, if I was to sit down with him, there is no cameras here. This is the same exact conversation that I feel like we would have had.
Of course, yeah.
So it's honestly cool to just be able to document it. Again, he was totally cool with being able to, with hopping on here and sharing some of this stuff with you guys, because how much do sometimes people pay for your consulting, your coaching?
So for that, I'm charging $2,000.
Got it.
Now the way that works is I have a 4-day training,
Got it.
and I tell people right off the bat, right? Because there's so much stuff out there. People are like, oh, I don't know if I want to do it, blah blah blah. I tell people, if you come in day 1,
Yeah.
up until day 28, you feel like you didn't learn anything, I will give you your money back.
Yeah.
And if you don't believe that, I will put it in writing for you. But you will get the money back if you did the assignments and you feel like you didn't learn
Yeah,
anything.
absolutely.
The reason I say that is because nowadays there's a lot of people that are lazy. Right? They have goals, they want this, they want that, but they don't want to put in the work.
Yeah, man. Yeah.
So if I make a promise to people that if you come into the training and you do the assignments, and I give assignments that require you to put in 2 hours of work worth of work a day. Now, if you do that on a basis of 4 weeks, you will be very confident with trading. Now, beyond that, what I can't control is the motivational aspect.
Yeah.
You know, so if 4 weeks are done, you'll learn. You'll be able to understand price action. You'll be able to understand how to find stocks, how to control emotions, things like that. But I cannot motivate you to continue to keep going.
I can't do it for you, man.
That's the biggest thing I've noticed so far up until now. That's the biggest thing I've noticed with people. Now some of the people that do take the training, they walk out, they do well. Now the other people that aren't doing well, it's because life came in the way. Family problems, school,
Excuses,
this, that.
man. Yeah,
Excuses.
yeah.
And I tell them, like, listen, if you're gonna let life come in the way now, you're always gonna let life come in the way. Be it with anything, be it with stocks, real estate, whatever you wanna do, you're always going to let life come in the way.
Absolutely, man.
And some of them say, oh, when I get done with school. Now, when you get done with school, guess what? Something else is gonna pop up. Then something else is gonna
Then
pop
you
up.
get a girl, then you get some kids, man, then you get yourself a house.
And then you're stuck in that cycle forever. So
and it's so funny, man, because how old are you, by the way?
23.
23, okay, so same exact.
Are you 23 too?
Yeah, I'm 23. And you know, it's funny, man, because I feel like at this age is the age where we're so flexible, we're like fluid like water, right? Like Jet Li would say, you know? And I feel like we can adapt. Like I've moved like 4 or 5 times within the past 2 years to adapt to new opportunities and take on new challenges and seek new opportunities.
But the thing
right?
is, people are afraid. People are afraid of doing that.
Absolutely.
You know, people are afraid of taking those opportunities because you moving 4 or 5 times takes a lot of courage.
Yeah.
People don't have that.
Absolutely.
People are afraid because it's like, what if? They look at the downside. What if?
Well,
but what if it works out?
Yeah.
You know what I mean? What if it works out?
Where you come from, and what's your nationality?
I'm from Pakistan. I was born in Pakistan. Yeah.
Okay, so Pakistan men are very, very tough people.
Yeah.
You know, so it's like you know, for a Pakistani to get into the investing space, I feel like you are already emotionally stable and capable of enough of handling it. I'm from Africa. I'm from North Africa, from Algeria.
Okay.
So I feel like I'm also I feel like I get that tenacity or that the ability to kind of, you know, jog for a while. Like, I don't even know how to put it, man. I'm able to run marathons in this game, you know what I mean? Because this game is a marathon, man. Like this entrepreneurship game is a marathon.
People think it's a sprint, and there's a difference between that.
Exactly, man. And so, you know, coming from Africa to here, were you born there or here?
I was born in Pakistan.
Okay, beautiful. How old were you when you came?
I was about 5.
5. I came here when I was 8 years old.
8, okay.
Right, so just coming here, man, you kind of, you know, even though we were not really super conscious when we were that young, but you can register stuff,
of course,
right? So that's like we're learning everything by symbiosis, symbiosis. I think if it's the right term, but just through, you know, kind of the environment that we're in, right? The society that we're in, right? Like how our parents, our family behaves, and we're registering all that. Then we come to America, and we're like, dude, there's way more going on.
Way more, yeah.
You know what I mean? You can feel it. you can see it.
But the people that haven't seen the other side don't understand
exactly.
that. So they don't understand that. But the people that have seen the other side fully understand that.
Black and white.
Yeah. So it's like I feel like that's us having an edge in a way.
Mm-hmm.
You know, it's like a lot of people, once you're able to see both sides, you're able to see the good and the bad.
Yeah.
Which is why traveling, I tell people, traveling is like the best investment you can make in yourself.
Absolutely.
When you travel to, there's two types of places you can travel to. An area that's very, very, very underdeveloped, like a third world country, and an area that's very, very rich.
Yeah.
Why? Because when you go to an underdeveloped area, it humbles you.
Yeah.
Now, when you go to an area that's very full of wealthy people, it also humbles you as well.
Yeah,
because now it's like there's so much more I need to achieve. You know, like for example, you go to Dubai and you see all these people with, you know, these expensive cars and watches and things like this, and you're like, wow, there's other levels to stuff. Then when you go to a country like Pakistan, right, certain parts of it are very, very poor. You're able to see how underdeveloped that area is. So it humbles you, and then it also pushes you to want more. So, you know, traveling in a sense like that really, really, really helps you a lot. It helped me out a lot. Every time I travel, I, you know, try to take something away, and I always walk away with some sort of experience that, you know, motivates me and keeps me going.
Beautiful, man, beautiful. I honestly, I recommend for anybody that's tuning in, again, whether you're on YouTube or listening on iTunes or Spotify, make sure you subscribe to the podcast. But I did mention to you guys before that I recommend, if you're you know, not like quote unquote American, I guess, you know, if you're like your background, if you're like Mexican or Indian or Nigerian, whatever it is, make that time. All right, take a week or whatever it is, save up some money, and take that flight to your motherland, right, to see where you come from, where your ancestors come from, and really, really humbles you in the sense like nothing else. I mean, you can't put it into words. It's just you see and you're like, wow, I come from a lot more, and I'm taking it all for granted. And that's why I go back to Algeria like every 2 years.
It's good to go back.
Absolutely.
No, but the thing is, people like to spend stuff on materialistic items because of social media. Why? Because if you have a nice car, a nice watch, something like that, people would rather invest it in that or spend money on that
for other people,
or going to the club.
You
know, like, why would you spend so much money going to the club where you can just save that money, not go to the club, and invest it into traveling? Because that itself is an investment in yourself, because now you're opening up your mind.
Absolutely.
So people don't look at it like that. They look at it as I want to go to the club, and I want to post it on Snapchat, I want to post it on Instagram, I want to look cool.
To make it look cool, man.
But that only lasts for a night. That's it. Everyone forgets about it.
Right?
It's gone.
So, another emotional decision,
that's
right?
It. See, emotions are underlying factors of everything.
Dude.
Everything, even stocks,
man, the way you live life, the way you move in general. So, Umar, thank you so much, man, for hopping on, man.
Thank you for having me.
P2P Nation, hope you guys got value out of this, or I know for a fact that you did get value out of this podcast right here. Please be sure to check out Umar, Mr. Ashraf's channel. All right, we'll put the link in the bio. Make sure you check him out on Instagram. Where's your Instagram at? It's
at Umar Ashraf.
Umar Ashraf. Yeah, we'll tag that in the description as well. But again, highly recommend if you guys are interested in learning about stocks, about investing in general. He's definitely a good start. All right, somebody that I can definitely stand by and, you know, recommend and stand behind. So check him out. But other than that, hopefully we can catch him in New York. He can show us around. Is that how long you been living in New York?
I've been living there since I came to the States.
Since he came to the States, perfect, man. So we'll catch you over there. We'll have some fun.
Thanks so much for having me,
Show us around.
Appreciate
absolutely,
it. Thanks so much.
Absolutely. Take care, guys. We'll see you on the next episode of Secure the Bag Podcast. Love you guys so much, and I will see you on the next segment. Peace.